Hi, this is Dean Hoffman. I'm the president of Strategic Trading Systems Incorporated and also the developer of the Relativity Trading System that you're taking a look at here today. And in this very short video presentation, I'm going to cover some of the basic concepts that are at the foundation of the Relativity Trading System. It's going to be a look under the hood to some degree. It would take far too long to go into all the specifics of the system, but for those of you that are interested, this high-level overview should be quite informative. So without any further ado, let me move on. One of the very first things that I want to make completely clear is that the relativity trading system is very, very different from probably any other trading system that you've seen. The concepts that it utilizes are an order of magnitude above and beyond even what I've done in my own systems previously. And just to give you some of the facts about the system, it does utilize the Mechanica trading software platform, which up until very recently was really only a professional platform. The price tag was very high. It was and still is $25,000. It's well worth it if you're a professional trader and need that kind of platform, but the individual investor, generally speaking, was not able to justify that sort of expense for their trading systems. And fortunately, Bob Spear, the developer of Mechanica, recently came out with a runtime or a read-only version of the professional version of Mechanica, and this was an amazing thing to happen because what this did is it allowed the price tag to come way down and it allowed the features available in a trading system to go way up. And it is that synergy between those two things that I have utilized in the development of the relativity trading system. I would call this a paradigm shift in the sophistication of trading systems, and I can say confidently that the features available in this system were ones that were really previously only available to the high-end or the professional market. So let me get into some of the key differences. Once again, to go into specifics would take too long, but I want to touch on some of the high points that really make the relativity trading system stand out. Okay, one of the features that really stands out the most, at least in my mind, that is different and is brand new with the relativity trading system is the concept of utilizing a dynamic portfolio. Relativity screens virtually the entire universe of liquid tradable commodities every day, and it ranks them and then uses that information to create a dynamic portfolio set. And what I mean by that is the portfolio set that you're actually going to have on your radar every day as those markets that you might be willing to trade. This is in stark contrast to what I used to do with my own systems and what most other systems do, which is they start out with a static portfolio. That is, you select ahead of time maybe 10 or 15 or 20 markets to trade, and then it is only those markets that you look at from that point forward when you're generating trade signals. And this is not nearly as robust because the problem with that is, first of all, you've probably chosen those markets based on their past performance, which really is no indication of how they may do in the future. And secondly, should a large opportunity occur in a market that that is not in your static portfolio, you're going to miss it. And right now, a good example of that would be in Malaysian palm oil. It's an exotic market, certainly not one that are in many people's portfolios, at least that I'm aware of, yet it happens to be the best trade that we've seen anytime recently. Relativity was in that trade, and if I had a static predefined portfolio ahead of time that didn't happen to include this exotic market, I would not have been in that trade. So there's tremendous benefits to having a dynamic portfolio set. One analogy I like is that of a snowmobile, which basically says that if you find yourself in the middle of the desert, don't try to tweak your snowmobile. Your effort and energy would be far better spent looking for different conditions, basically looking for snow. And this is what a dynamic portfolio set does, is instead of trying to tweak your machine for the wrong conditions, it goes out and looks for the right ones. The relativity trading system is made up of 5 different individual and unique trading systems. Once the optimal conditions have been identified and the optimal portfolio selected, it's at that point that those 5 systems plug into those optimal markets and on a daily basis work to generate trading signals. As you can probably imagine, with 5 different trading systems looking at over 70 markets, there's a very large number of trades that are generated. However, keep in mind, the Relativity Trading System rejects approximately 10 trades for every 1 trade that it accepts. And the basis by which trades are filtered or rejected fall into a number of different categories. Most of them are based on some level of risk management or risk control. The exception would be the first one, which goes back to dynamic portfolio selection. If the market chosen for a trade does not fall within the dynamic portfolio, that trade is simply rejected immediately. The next level that is gone to is that of looking at total portfolio risk, sometimes known as portfolio heat. This number is computed by taking every single trade that you currently have in your portfolio that is open, subtracting where the stop loss order in that particular trade lies, and then adding all of those together. By doing so, that gives you a figure which represents the total amount of risk you're currently taking, approximately, minus slippage and commissions, in the market. If the new trade would cause that number to exceed an established risk parameter, that trade is simply rejected. A secondary level of this is sector risk, and sector risk is very closely related to portfolio risk. Basically, what sector risk looks at is highly correlated or similar markets. For example, if you have corn and wheat and soybeans, those are 3 separate markets. However, they tend to move together in tandem. So to have 2 positions in one of those markets and 1 position in another is essentially like having 3 positions almost in the same market. So what is watched very closely is how much risk there is in a given sector, and if a new trade would cause that sector risk to be exceeded, once again, that trade would be rejected. Finally, there's a look at the trade by itself given its individual risk. Assuming that the portfolio risk is okay and that the sector risk is okay, now the trade is going to be looked at by itself, regardless of those two, to see whether a loss in that market would represent too big of a percentage loss for the given account. If so, once again, that trade is rejected. And finally, there are several proprietary filters developed by us that the trade needs to pass through in order to make it to being a targeted trade, one that's actually executed. If all of those parameters and all of those criteria are met, at that point you have a viable trade that would then be executed the next day with the Relativity Trading System. To summarize what we've talked about here today, the Relativity Trading System is totally unique and is unlike anything else available on the market. It includes 5 different trading systems, each of which are unique in their own right and cover various time frames. This also includes the Mechanica Runtime Edition, which up until very recently would have cost you over $25,000 just to have the capabilities available in that platform. So it's a tremendous bargain. The Relativity System utilizes advanced market screening and ranking, once again setting it apart as a unique system in that regard, and also manages risk with multi-layered, sophisticated algorithms. We talked about how portfolio heat as a whole is managed, how the sector heat is managed, how individual trade risk is managed, and also how to manage ongoing risk with resizing, which doesn't even include traditional market exits. And when you put all of this together into a back test, you get some excellent results, and the final outcome is a unique and a winning trading strategy. So I want to thank you for your time here today. For those of you that have additional questions, I want to encourage you to contact me personally. I thank you again for your time, and I wish you a profitable day.